yo, we don't have any fucking money. Save us, Fed, please.
How are you dealing with interest rates? It's too damn high. Speaking of jobs, do we have them? Can we keep them?
No.
This is Angry Capital, where money is the villain and the Fed is its evil wizard. If we make you laugh, flinch, or question your 401k, you know what, guys? Hit like. And if you actually learn something, hit subscribe. 3 shows a week exposing the absurdity of modern finance, because that's what it is. It's absurd, right? Let's go.
I mean, if we start at the top, let's talk about the unelected wizards of money. The Fed just quietly pumped overnight. They do this in the secrecy of the night. They pumped $125 billion into U.S. banks in just 5 days. Some say, hey, this is business as usual, while a lot of people are really sounding the alarm. We're trying to figure out which one it is, because this looks alarming. You see these headlines, $125 billion. And it doesn't help that this started on a Halloween night where these banks started panicking and they're like, yo, we don't have any money.
Yeah.
Can you come save us, Fed, please?
The feds can get away with anything. I think the problem I have is I don't get away with anything when it comes to my taxes, my credit, my debt, right?
Yes, you do. Yes, you do. You know you've cheated and you've gotten away with some stuff.
Of course I've done that, but I mean the system doesn't allow us to get away with things the federal government can get away with, right? $125 billion, nothing, $125 billion, right?
Exactly.
And, over 5 days too. That's also including $29.4 billion on October 31st, right? As you said, to ease funding stress. Reserves hit a 4-year low. Markets now price a 67% chance of a December rate cut. A move dubbed stealth easing. Oh, ease it in.
I know they're trying to make it sound really don't worry, there's nothing to see here. But the banks are panicking behind the scenes. They're like, yo, we are not going to have money in the morning. And this is going to collapse the whole system. So Fed, I don't care if you're open or not. You got to give us money overnight just to get through the day. That's how bad it is.
Yeah. I mean, are you stressed about this, Arthur?
Yes. Can't you tell, Paul?
Yeah.
I mean, I was stressed. You know why? Because as soon as the whisper started coming, the stock market started going down. And when the stock market goes down just a little bit, the crypto market takes a huge tumble. And it's stressful because it's we're trying to get ahead here. These are the things that we're being forced to invest in to get by here.
Right.
Nowadays,
it also it's also like a Band-Aid, right? Fighting inflation by printing money for banks is like doing dry January with a flask.
Exactly.
It's not really going to help.
Right. And in the Fed, I mean, they're already on their way to cutting interest rates. I mean, the stock market was overjoyed just a couple of days before because the Fed had cut interest rates by 0.25%, which just means money is cheaper to borrow. And I'm sorry I'm cursing so much, but I'm passionate about this because this is the silent way that you either lose money or gain money here in this system is by what the Fed does. And they're not elected. They're just able to work in secrecy. It's crazy, man.
Yeah. Don't apologize, first of all, too. I like this energy from you. I feel like you're fed up. You're fed up with the feds. That's what you're saying.
Absolutely. Because, I mean, I know we're going all over the place here, but if you just look at what they're doing here in lowering this interest rate, this is going to be good for us in the short term, people who are speculating on assets. But in the long term, it's just eroding. It's just throwing more money into the system. Inflation goes up, jobs go away. What are you going to do?
I mean, when has there ever been a government solution that's long term? Think about it. It's always kind of optics or fix this thing, put a band. It's like we're in this giant fish tank and they just keep putting duct tape on the little holes of water leaking out. Eventually, we're all going to lose what gives us life, which is the water.
Yes.
I don't know why it's coming to us all dying, but you know what I mean? We're getting squeezed.
It's that serious, though. And I mean, because they keep squeezing a little more out of us. And they say, they're cutting the rates. They're claiming that the economy is fine. What headlines are you reading? Nothing is fine. We don't even know because the numbers have been so delayed because of the shutdown, which thankfully is supposed to end as we're recording this. But I mean, this is when the banks are doing emergency moves like this, it's like calling 911 for a headache. They're jumping the gun here. Something is wrong. Alarm bells are going off.
Yeah, and also this comes out, Chair Jerome Powell said the move was aimed at cushioning a cooling job market, but hinted it may be the last cut of the year about that interest rate cut. I don't know. 2 Fed officials dissented, one pushing for a bigger 50 basis point cut, another wanting to hold steady, exposing deep internal division over whether inflation or unemployment is the bigger threat. Everything's a threat. How about that?
Yeah.
right?
You know, the funny thing about this is the big threat are these two Fed board governors who are dissenting. They're trying to be the next chair. So they're trying to get in Trump's favor and be like, oh, yeah, you should cut the rate more. Like, Jerome, what are you doing? You are being too stingy with this. So they're trying to get in his favor because they want to be the next Fed. And they cut the whole interest rate to 0 and just print free money.
Right.
So businesses can go boom bust.
Sure. And when Powell says it's the last cut of the year, just remember that's Fed speak for we'll cut again next month if stocks cry.
Exactly. And like, it's just not monetary policy anymore. Like, this is emotional support for the market. This calms markets. It riles them up. And that's the Fed in action. But Paul, I want to explore how we even got here. Like, who gave the Fed the keys to the money printer? I know you love history. Have you dug into this at all?
I like this a bit too, because yes, I think we're constantly like, look, this isn't going anywhere. I also don't know if everybody fully understands how this is going to be solved. This is a systemic thing. Well, let's go back. You know, I like going back in history. Actually, can we set the mood? This is our little history section. Let me get my pipe out. Hold on.
Okay.
What's in the pipe? The year is 1913. After bank panics, the Fed's mission is maximum employment and stable prices. It evolved from a crisis tool to global money manager via rates, bond buying, and balance sheet alchemy.
You don't say. But there's a whole other side of this. I mean, that is crazy. It goes all the way back to 1910, JP Morgan having these secret meetings on Jekyll Island. Like, that stuff is, I think, how it was more engineered to serve the financial elites rather than us. They try to use it as, oh, we're saving you. But really, who has it profited over the years? Not me, not you.
Well, this is a theme we talk about all the time. I mean, I do think this is the design of our system. You know, it has always been to protect the people in power, the people with money. Right. We've sort of been fed this idea that we're all in a rat race to make money for ourselves. But at the end of the day, there are people smoking pipes behind doors that are not on camera, on screen. I think, you know, doing the puppet strings here, that has to do with how the markets move, man. I mean, like, do we really matter? I don't think so.
No. Well, we matter if they can make money off of us. And that's how they do it, is by manipulating some of these rates. And I mean, it's a whole deep thing that everybody should kind of look into. We don't have enough time for it. But the on the record reasoning here is this started as a safety net for bankers because they almost crashed the system in 1907. And now it's like the trampoline that they just bounce on every single recession here.
Yeah, right. The dual mandate is like saying you want to diet and you binge at the same time. Like it's like, again, it doesn't really work. It's an oxymoron. And I do think, don't you find that like they'll say anything to get away with whatever helps them?
Yes, they will say, they will do anything. Yeah.
Right. Now, did you see the clip actually? I actually love this clip when it came out with Trump and Powell with the hard hats. Can we watch? I'm not sure if we can watch this right now.
Yes.
This was a few months ago. Trump is pressuring Powell to cut rates. Powell insists on independence. The White House versus central bank tug of war exposes how independent monetary policy really is. Just watch it. See how awkward this is. He's pushing him live on CNN.
We're taking a look, and it looks like it's about 3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, and I haven't heard that from anybody at the Fed.
Yeah, it just counts.
Our notes said about 3.1 as well. 3.1, 3.2. This came from us?
Yes. I don't know who does that.
You're including the market renovation. You just added
entire capital.
Yeah, you just added in a third building is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished more than 5 years.
It's part of the overall work. So
it's not new.
I was gonna say, this is classic Trump. Like, you know, he doesn't care who's watching. He's gonna try and bully you into whatever he wants, right? And how awkward to watch this and the give and take of these guys.
Dude, it is hilarious the way that he pushes back. And Jerome, I mean, you got to give credit to Jerome. He's got the balls to stand up to him in front of the cameras because Trump is obviously lying. They're just putting together whatever numbers they want. They added in a building that had already been accounted for. It's just crazy. But it's so funny because Jerome was his guy. Trump picked Jerome to be the chair of the Fed back in his first term.
Yeah. It's also like, how many of these moves, we've seen this in Trump's presidency and his 2 terms. How many moves are to curry favor to Trump to get something in return, or how much is actually for the benefit of the American people and democracy and our income? It's usually the first. It's usually how to curry favor and win for you and your partners or whoever it might be. I just love that this is like out of a bad movie, like the hard hats. This is like a little bit Biodome. Is that the movie? No,
yes,
Biodome,
with Pauly Shore. Yeah. Hilarious. They look like idiots. Like, these are the 2 most important people in the world, and they're bickering over the price of a building with hard hats on. So, the Fed says that it's independent, but clearly it bends to the pressure of the American presidency if they bully you enough, and especially on live TV.
Yeah. Powell's the only guy whose boss can threaten to fire him on Truth Social, which is kind of what could happen there, depending on if he doesn't, curry up to the big man. Exactly. All right, so that's the main switch. But what about rates you actually feel? And this is the one that gets me going and stressed. The mortgage, the loan, the car, right?
Yeah, because that is a stream of money that you want to follow to see how it all drains to the rest of us here.
My question to you is, if the Fed cuts their rates, do we think mortgage rates are going to go up again like they did last September, or do you think they might come down?
I have no idea.
Rates are down today.
It doesn't matter, because let me explain why. If anyone can predict that, it's insane. Powell is cutting the shortest of short-term rates. Overnight rate. It is, okay, you look at a spectrum of different things that determine rates. It is the shortest one. It's overnight. If this rate cut happens and the data shows or the market sentiment shows that we're going to be weaker, then guess what? The bonds will sell off and the long-term rates go up. So you don't know. You don't know.
Nobody knows.
That's what I think. No one knows. Everyone, all the greatest economists out there and all that, everyone has their predictions. Yes, you can say one way or the other, but the reality is you don't know, because prediction is extremely difficult, especially if it's about the future.
Exactly.
Yeah, man, the average rate on a 30-year U.S. mortgage ticked up for the first time in 5 weeks after falling to its lowest level in more than a year. So mortgage rates, are influenced by Fed policy and bond market expectations and generally follow the 10-year Treasury yield. Rates would have to drop below 6% to make refinancing attractive. 80% of mortgage homes are below 6% and 53% are below 4%. And if you're like normal people now, if you didn't do this a few years ago, you're
Yeah, are you Paul? Are you
Yeah,
you are
100%. Yeah.
What's your rate at? What's your rate?
It's too damn high. I'm like the guy who ran for New York mayor. Remember that guy? Rent's
Silva?
too damn high.
Yeah,
My
put the little beret on. No, this is crazy. But
I'm over 6.
You're a Jesus. So, okay, now how do you feel about the new 50-year mortgage? Have you heard this proposal here?
Yeah.
So a 50-year mortgage, like if you had a $400K house, 30-year mortgage, you're probably paying $40K in interest. Literally a 50-year mortgage will double the price. You'll pay $400K just in interest, so double the home price. That's crazy. They're just trying to continually screw you because you say, oh, I can get a lower rate per month, so I'm going to do it. But it's it's bad out there. And I can't imagine the crunch that, you have to be feeling, that pressure of the interest rate as it creeps up there.
You know what it is? It's so many Americans like me and you, man. We're forced to make decisions to better our families, to try and survive, to have money, to you get squeezed into taking a crappy rate because you could afford the payments and you just want to make the next step. But it's such this specific issue. I think for people of our generation buying homes specifically, this is one that I think gets under so many people's skins. It's so hard to just make it happen. And look, 50 years ago, were our parents just like hunky-dory having money grow on trees and it was easy? No, but it maybe was a little bit easier to not pay interest your whole life, just to have a home.
But also when you look at just like the percentage of income that buying a home used to take up of your monthly income, it was like, 10 to 15%. Now it's like 30, 40, 50 plus for most people. It's just crazy.
It's disheartening too. Like when you make your money and when you look at the numbers, like the 50-year, could you imagine? Like you look at how much you make and how much just goes to nothing. Really, it feels like it's nothing.
No, it goes to the banks. It goes to the banks that created these products to screw you out of more money. Yeah. They take more money, you get less home, and it takes longer to own that home. It's such
Then
a
again,
devastating deal.
It's an American capitalist right, I think, to own property. I think it's a really important thing to be able to pull off. But I do think this system has made it harder and harder. Like, I'm so old school. I want to go back to the days where I'm just bartering for land. Like, why can't we just go back to like
You don't want.
I want that. I want
You
no
have to barter
interest.
for land.
I want to
Paul.
come with a couple goats. I want to go, here's 5 goats.
You don't have any goats right now. How are you going to get the goats?
Now I'm renting the goats. It's owned by some BlackRock. And by the way, the farm's an Airbnb. I mean, this is a different world, man.
I mean, this is the future, dude.
Yeah.
Like, you're describing the future. We're going to need very real things like goats for milk and stuff in the homes, but BlackRock owns all the homes. What do we do? Dude, I'm not looking.
That's what freaks me out about all this is like, you know, we keep getting squeezed. We keep getting manipulated by the puppet masters on high. And I do think that we don't have the power. The average American doesn't have the power. And that also ties into like our credit and other things, because this is a system that we don't have the same leniencies the government has. And that's what I don't like. You know, this happened. I'll tell you, we'll talk about credit in a second, but I have a very personal story about my credit that like has affected me forever. One mistake. And now
What was it?
I just missed a payment that I did. I moved addresses. I didn't realize I didn't do my first car payment. Missed the notification. Change addresses. Car payment due. When I went, it was like the worst ding ever. I mean, I got the worst rate ever on my new lease because they saw that history and they were like, "Whoa, bro, you don't pay your car payments." I was like, "No, I missed this one. Look at the rest of them." My point is, I messed up once. I messed up once. And it's affected me for years. Why is that? Why is that our system?
Because they want to punish you. You don't ever not pay the bank. You will be punished for a long time. I mean, I think I told a very brief version of this story. Same thing. I got taken to court by Capital One. Now, granted, I was 18 and I thought you could just like not pay them and, what's going to happen? But they took me to court. But it ruins you for like 10 years, especially when you're just starting out. You have no money, no income. And then it sets you back 10 years. And especially, I think for our generation, it takes so long, even if you have a good head start, to get that home, to be able to provide for your family in what was supposed to be the normal way. And then we get set back by things like that. And student loans are a whole other thing, but the credit cards, they screw you because our whole system is built on consumption. And now the average rate is like almost 22%. Student loan rates are almost 7%. I mean, both, the Fed and the Treasury are just making money off of our interest. And it's just a faster way for all of this to go down.
Right. It's trickle down economics, except the trickle is blood from your wallet. That's what you're bleeding every time you pay.
Right. Exactly.
Man, this one hits home. You know, I think we're all so affected by this. It's like, how do you get out of it? I also want to say a disclaimer for everybody listening and watching. You know, like, we're not here to be doom and gloom. We're here to kind of be realistic about how these things affect us, because this could feel depressing. I also think if you're smart and prepared, there's ways to work around some of this, but it's like we have to be honest about the challenges we all face. Rates are going to be rates, you know?
Right. I'm telling you, like, this is not an ad or anything for this book, but I pulled this out because I was looking at this because of doing some research here. But I will teach you how to be rich.
Guys, this just became one of those Instagram pages. I don't know what's happening. We're just doing a podcast, and Arthur just made it one of those guys.
This is my
book.
You
just follow me and follow these tips, you could have a McLaren.
I'm just telling you, it's not about that. It's not. It's very sensible, practical investing advice, and it is very practical advice for how to lower your credit card interest, how to pay off debt. There are some really effective plans out there. And I get it, there's a lot of scammy shit too. This wasn't, and it helped me to rethink it.
You know what, man? I'm making fun of you, but you actually bring up a very interesting point, and this is like a more systemic issue that we haven't really pursued, which is education. You know, we're not taught to actually deal with this stuff. What do you learn in school? I mean, I had one accounting class in high school. I failed, and the teacher used to smoke cigarettes and drink coffee and yell at us and barely taught us that. This is all guys school.
In the class, they were smoking cigarettes? That's
cool. It's all guys school in New Jersey. It was a little old school. My point being, education-wise, the onus of us as people and citizens to figure out how to do these things, it's not really given to us as kids, or we're not taught even in college. So I understand why you're recommending the book, because you're like, hey guys, this is just tips. But I keep seeing on my feed these people that are like saying, like, look at my car. I don't do anything. I sit at home with my pants off and I make 6 figures in a month.
Yeah.
Like, I'm fearful you're becoming that guy here, but I do think that it's education, man. We don't talk about it enough.
I'm telling you, man.
Convince people to just educate themselves. Yeah.
Right. And it's easier than ever now, but it is easier to fall into the trap of scammers. That's why you got to watch out for people who are selling you courses, who are all of that stuff. But there is some legitimate advice out there. And that's why I'm here today. This is why I'm passionate about this. It's because YouTube was kind of a forum for me to understand the game a little bit better, to try to get maybe a step ahead just to protect for our family, But I mean, like stuff like this, understanding the way that the credit game works, understanding all of that, it's huge. And especially with student debt, like so many people, dude, the only reason I'm thankful for being an idiot and an absolute idiot who barely got out of high school at the time was I didn't saddle myself with a bunch of student debt. I would be in such a worse position, but so much of America has had that pushed onto them. And it's almost like predatory lending in my view.
I did the same thing, man. Paying off my student debts is the worst example of how to manage your money ever for me. I was really immature about my finances, and in a way I still maybe am. And part of why I'm glad to be doing the show with you is learning with everyone listening how to just be more informed about all this. But I graduated college with a lot of debt, and I was mad at the interest. I was mad at the percentage. So I spent, and this is where also you can get my spending habits and why my credit's been up and down my whole life.
I want to see some statements here.
I was just upset about it. I just didn't pay, as I wasn't, how hard it was to get a job. I was like, I didn't have the money. I should have just paid a little bit. I just boycotted the whole thing.
Fuck it. Yeah.
Dumbest thing you could do.
Right.
Waited.
No, I get it. Especially when you're a young, dumb, 25-year-old male in America. Come on, you're gonna take the risk.
Also, don't you really? We're dumb. We're young. We want to go spend money on drinks and food, and we don't want to deal. College is over. I don't want to pay for it anymore. This is kind of how I was. I waited years, man. I barely paid it. Paid little minimum payments, and then by the grace of God, was able to get an opportunity. And I made more money than I've ever made at my job finally, and it literally went all to my. I didn't get to keep any of it. It went all to my student loans.
Right.
And that would have been maybe a nice little bump in income that year, but instead I had to finally, and I paid so much in interest. So this is not advice for you guys, but it's pay what you can and be smart about this stuff, because the amount of interest I ended up having to pay was double, if not more, than what I owed because I waited so long. What a dumb idea, right?
But see, you don't understand that fully when you're that young.
Right,
and then look how they do it again right after you get out of the student loan trap. Hey, here's the homeowner trap.
Right.
And here's another 6% interest that you're never going to pay off.
And, talking about those interests before, if you got in before 2022, you might be okay now. But right now, we're kind of at a frozen housing market situation. 80% of homeowners are below 6%. So you're not going to sell that home or refinance or anything. You're going to stay as low as you can. It's also making people frozen.
Right. And I mean, the rate cuts that are coming, they don't mean relief for borrowers. This is more for borrowers who are taking that money to go speculate, but not necessarily on mortgages. And this really begs the question between what's essential debt versus predatory debt. Should rates be regulated differently? I think you could absolutely ask that question as well. Yeah,
but we bring up regulation all the time, man. And we already know it doesn't really matter if it's going to, for us. The regulations are not really in place for us, right?
Right. And the safety net is eroding and all of that. And I mean, once you follow the rates, you can see, but also, you got to talk about the rates that you can't see as well. The credit scores.
Man. Credit scores, risk algorithms, the phantom rates deciding your fate, which is what I'm talking about. Look at me now. I'm having a good time on the show. But if you looked at all this stuff behind the curtain, I'm a loser.
I mean, it's all a fraud. Everything is a fraud. It's all a house of cards.
I'm losing this game, okay, on paper.
Of life. Yeah. I mean, it doesn't really matter. At the end of the day, it's all a simulation. So fuck it. Who cares? I mean, none of this is real, right, Paul? Is any of it real?
No, but I do think the system we're talking about today, there's two sets of rules, right? It's rates punish people lower income, and they let the rich have a pass. Kind of what I've been talking about this episode, They hurt guys like us.
Right.
And they help people with pipes behind closed doors. And by the way, note, I smoke cigars and I'm cool with pipes. I just mean that image of the old rich guys in my head today.
I have several different images when you say pipes, multiple. They're all different.
The point is, I think there's two sets of rules, and you see them applied, and like again, it kind of ties back to the education point. It's like we don't really have the access to information, and if you look at income and how people are raised and communities, you know, we're specifically not taught these things. Like I think by design.
Yeah, of course, because they want you dumb and not to understand the system and how interest, you know, extracts money from you, how inflation is a silent killer. And I mean, the ugly part is the same numbers are a weapon. Like when you miss one of those payments, your score tanks and your life just gets more expensive. Governments, they get the bailouts from billion-dollar banks and vice versa. They do the same thing. They just refinance and move on. It's two different sets of rules.
That's right. You know, credit scores are marketed as neutral math, right? But they evolved from redlining maps and lending rules that literally graded neighborhoods by race. Now, this is kind of what we're touching on, which is a bit messed up. Blacks already economically behind because of systemic racism have less to fall back on when a financial crisis hits.
Right.
Minority applicants tend to have significantly lower credit scores, higher leverage, and are less likely than white applicants to receive algorithmic approval. That's from Bankrate right there, which is...
Damn, even the AI is racist. Yeah, even the AI is racist.
These objective scores determine every rate you'll ever pay, from mortgages to car loans, while wealthy borrowers operate on entirely different terms through private credit lines and government-backed liquidity. This is going to sound like the whitest thing I've ever said after I just read that.
Please, I can't wait to hear it.
One of Jay-Z's recent albums, it's just... You know, here's a guy raised in the projects. I just love, he has a line in one of his, we got to pull this up. I probably don't have the rights, but he has, you know, like what's cooler than like bling, or what's cooler than all these bottles, something like superficial in hip hop culture. He goes, credit, credit, credit. And he talks about just building his credit. Yeah. How like he had to get to a point to, you know, outgrow the system he was a part of to improve his credit and figure out how to make that better for himself. I probably butchered the line and probably did it.
Probably.
Really
I want to hear you rap it. Can you rap it?
Yeah, no. After reading all these terrible stats, let me do some Jay-Z. That's perfect for this episode. Yeah. But I think it raises a good point about the education and kind of the systemic part of it. Whether you believe in what they said there or not, I just do think it's harder. It's harder to understand this stuff.
Yes.
Oh, here we go. It's called Story of OJ. Well, that's not where I was going. I forgot that was the title.
Okay, I like it though.
Yeah. Right. Fix your credit and then get away with murder. That's not what I'm saying here.
Hey, there's a loophole to everything, Paul. I think that just reinforces that. But I mean, I get what you're saying though, and it's definitely not taught, and it's definitely something that is an open secret where we're kind of led down a dual path of like, you have to borrow to get ahead, to get a house, to get the education and this and that. But also borrowing is bad. If you rack those credit cards up, that's bad. We're going to penalize you. Yet, everybody who's wealthy, all of the spending they do is done on borrowed money. They're just accumulating assets to borrow against them. And that's the secret hidden game that we need to learn how to play too.
Yeah. I want to shout out our producer, Andrew, who just pulled up this quote for me because he sees how badly this is for my branding, the way I did it. So I just want to read it quick.
Oh, please wrap it though.
Thank you, Andrew. You know what's more important than throwing away money at a strip club? Credit. Thank you. That's the line.
Like
Thank you for that, Andrew. I needed that. That somehow made this all worse, I think. What you talk about, Arthur, that I think is really what bothers me the most. I talk about my personal stories, right? Like I got all this debt from my student loans. I get all this ding on my credit from my car payments on my last car. You're punished when you miss a payment, but Washington racks up $35 trillion in debt and still gets the best rate on earth. Like that, how is that allowed? Like, why is that allowed?
Yeah, I mean, but everybody's borrowing from one another. That's the whole thing. Right. And by now, it's up to $38 trillion. So another, like $1 trillion gets added every couple of months here. But the credit rating for the U.S. did go down. I think it went from AAA to AA. And so the rest of the world is a little sussed out by the United States. They're like, these fools don't look like they're going to be able to repay their debts at some point here.
It's all too much, man. It's all too. When you actually look at the numbers, it's like, how are we ever going to, get back to where we once were? Just borrowing, the government, us as people.
Well, that's where Russia thinks, their foreign minister thinks that the U.S., their involvement in crypto is all just a front for them to transfer their debt over to crypto and then say, poof, it's gone. Our debt is gone. That's what the rest of the BRICS nations are thinking that we're doing here.
Damn. one thing we haven't talked about, which has affected some other things we've mentioned here, medical debt. Medical debt is also something that
Right.
I think was one of the hardest ones to swallow because, it's expensive. Biden era, listen to this, a Biden era Consumer Financial Protection Bureau rule that would have banned medical debt from credit reports was struck down in court just this summer. So the Trump administration signaled support for reversing it entirely, allowing hospitals and collectors to report billions in unpaid bills again. So
That's
quote,
the messed up thing.
Yeah.
Sorry.
No, I was going to read this quote for you. A federal judge has ruled that medical debt can remain on Americans' credit reports, a major blow to working class households. AP News.
And this is like the one thing, this and student debt, that you can just never get away from. But what are you supposed to do? Die? Like, that's the option. Die or be in indentured servitude.
Right. Or another way to say this that they're saying is basically you get cancer, your credit score gets cancer too. Just a heads up. So,
Exactly. Yeah. And the government calls its debt fiscal policy, and you miss a hospital bill and you're a risk now.
Yeah. It's moralizing poverty with interest rates. And don't forget, the things that are expensive in hospitals, and they never tried to make hospital equipment and these things affordable. It's something just to think about. The cost for healthcare is so insane. Of course, you're going to be in debt. It's really not made for the average person. God forbid something happens. How do you afford that? That's
Dude.
Yeah.
I remember I got hit by a car. I got hit by a cop who was drunk driving. That's a whole other story. And I ended up in the hospital. I almost lost my leg. And I looked at thank God I had insurance at the time because I was in my 20s and dumb. But the bill was like $400,000 for the surgery and the stay. And thank God I had insurance. But like, you look at the bill and there's a $380 aspirin. Why is there a $380 aspirin on the bill?
Yeah. That's crazy, man. Yeah, they take, and they know that you need it. It's life-saving care some of the time.
Right.
It's unfortunate that system. What happened? I'm just curious. How did you end up being able to? Did insurance help you, or how did that work?
Yeah, no, I literally thank God for the insurance. I paid $100 for. I mean, a lot of people have problems with Kaiser. Shout out to Kaiser. This is not an ad. You can bleep this out, but it was $100. Thank God that was there, because imagine. I mean, I already made enough financial problems for myself, but imagine being saddled with that in like your early 20s, $500,000 in medical debt as well. And real people are facing this now. And especially with the Affordable Care Act about to go away. I mean, it's just going to get worse.
Yeah, we're just talking about these debt rules, man. They're different for rich versus poor. Student loan collections restarting dropped millions of borrowers' scores by 100 points, locking them out of affordable credit. Meanwhile, the federal government surpasses $38 trillion in debt, which I talked about, effortlessly refinancing through treasury auctions at rates lower than your car loan. I'm only just bringing this up again because this is something that sticks out to me this episode is like, what choice do we really have? Maybe we should all go work for the government and we can get better rates.
No, because then they'll close down the government and a government shutdown and they won't pay you for weeks, but you still have to work. But I mean, it's just crazy because if you owe $1,000, the bank owns you. But if you owe $38 trillion, you own the bank and you get to make the decisions there.
That's right, man. I mean, look, the Fed decides the cost of money. Banks decide how fast to pass that cost to you. And algorithms decide if you deserve a discount or a penalty. So good luck.
Right. And we pretend that like all of this is objective, and it's not. It's power disguised as math with some Fed wizardry sprinkled on top.
Yeah. Next time someone says the market set the rate, ask who set the market. Okay.
I like that, Paul. That's nice.
Thank you. I'm trying to do some poetry. Actually, I brought that up because it's the title of my new book, Who Sets the Market? Written by me and Arthur, on sale in our bio. Just kidding. We're not selling anything. We're not giving advice. We're here to just bear this with you guys. Try and figure out how to make sense of this crazy economy and these financial news and world. So if you liked what we heard, or if you didn't like what we said, like what you heard, subscribe, leave a comment. I actually want to hear from you guys. Comment your worst debt story. What happened to you out there? How's your credit? Let us know. How are you dealing with interest rates? What's going on with you? Did you miss a payment and this happened to you? I want to hear from you guys and comment, and we may just mention you in the next episode. Thanks for watching another edition of Angry Capital. Arthur, man, I don't know what to do after this episode. Maybe get another credit card and buy a boat.
Fuck yeah, man. Let's go. Hey.
See you guys.
This show is sponsored by Galileo FX, the only automated trading software that shows you the wins and losses before you buy. Learn more at store.galileofx.com.